Are you a first-time home buyer looking to jump into the market but you're not sure where to start? Today I'm going to go through my checklist of 7 things that I think are really important to have in order and to be thinking about prior to getting into the market so that you know what you want and you're ready to go. Hi, I'm Brittany with the Thomas Group and Love Local Real Estate, your local Las Vegas and Henderson realtors. And today I'm going to go through a few things that you may want to keep in mind as a first-time home buyer getting ready to enter the market. There's some things that you need to get in order and have ready so that when the right house comes up, you're ready to make your move. Before we get started, real quick, just make sure you take a second to hit the like and subscribe button so that you don't miss any of our great content, home tours, community tours, things to do in Las Vegas, and more. It's super helpful and we appreciate the support. One of the first things you're going to want to do is think about your savings. Do you need to do a little more saving? Do you have enough money for some of the expenses that are going to come up? One of the big ones is the down payment. Depending on the type of loan and lender you go with, the down payment could be as low as 3% for someone with a conventional loan and excellent credit, or 3.5% on a FHA loan. VA loans even, you can get a 0% down, but you do still need money for other expenses such as closing costs. Closing costs will typically run somewhere around 2 to 3% of the loan amount. Could be a little more, a little less, again, depending on your loan amount. But this is a cost that you need to depend on having, especially in this market, as sometimes you can ask the seller to cover your closing costs, but in this current seller's market, it's not a good idea if you want to get your offer accepted. In addition to costs associated with your loan and closing on the loan are some other out-of-pocket upfront expenses, such as your home inspection, which will probably run you about $400, and the appraisal, which also is usually around $400. And don't forget to factor in your moving expenses if you're going to need to do any little repairs or fixing up, things to move into the new house. These are all things that you want to keep in mind when you're budgeting to see, are you ready to get into the market yet? The second step in your home buying journey is going to be figuring out how much home you can afford. You're going to want to visit with a lender and get pre-approved to find out how much you can spend and how much money can be lent to you to purchase your home. Additionally, you'll want to take into consideration what you feel comfortable spending monthly. Sometimes the maximum amount of sale price that you are able to spend doesn't translate into a monthly payment you're necessarily comfortable with. In this hot seller's market, sometimes it's also a good idea to maybe even look a little bit below your max budget to leave you a little wiggle room so you can come up a little bit in your offer to try to get those offers accepted and make them a little more attractive to the seller. Going hand in hand with that pre-approval, you're going to want to stay on top of your credit. Get a copy of some of those free credit reports that are out there. Take a look at it, see if there's any errors that might actually hinder you in your ability to get a loan. Dispute anything you see that's not correct, that's bringing your credit down. Make sure you're paying your bills on time. Don't take on new debts if you can avoid it. All of these things are going to help with those debt to income ratios, and the higher credit score will get you a better rate on your loan and you'll be able to be lent more. And also, talking to a great lender, if you don't have the best credit score and it needs a little work, a good lender can get you back on track so that you can purchase a home in the near future. If this is your first home purchase, then it's obviously your first mortgage as well. So you'll want to do some research into the different types of mortgages and mortgage terms that are available to you. There's the conventional loan. A lot of people will put 20% down. That makes sure that you don't owe private mortgage insurance, but with good credit, you can put as little as 3% down on a conventional loan, keeping in mind that private mortgage insurance will run you about half to 1% of the loan amount over the course of the loan until you reach 20% equity in the home. So that'll be a monthly cost that'll be added in on top of your mortgage that you have to pay to insure your loan until you reach that 20%. There's also the FHA loan, which you can get as little as 3.5% down. Again, that private mortgage insurance will come into play, so just factor in that extra amount. Maybe you want to save a little bit more money so you can get a little bit more money down and avoid the private mortgage insurance, or shop a little lower in your budget, but just keep in mind that's an extra cost. There's the VA loan if you qualify for that. That can be a 0% down loan, but there will still be closing costs, so you do still need to have a little bit of savings. You need to have some money to cover the closing costs and inspection and things like that. And as far as mortgage terms, there's the 30-year traditional term. The interest rate will be a little bit higher, but the payment will be lower since it's stretched out over 30 years as opposed to, say, a 15-year loan. Your payment will be higher, but you'll save a lot of money in interest in the long run. So you'll definitely want to explore all your options with your lender and see what your different payments would be and see what makes the most sense for you. When shopping around for your mortgage, Something to keep in mind is going to be the different rates and fees that different mortgage companies charge. So you will want to shop around and do your homework, and something to know that when you are having your credit pulled for a home, it's different than pulling your credit for a credit card where it gets dinged every time. When you're buying a home and your credit is pulled a few times within the same 30-day window by mortgage companies for a home, it will not negatively affect your credit. It's as if it's only being pulled the one time. So you'll want to do that so that you can get the best rates, the best fees. Something else to keep in mind as far as that goes, our lenders also offer what is called discount points. And it may be worth your while if you have a little extra cash on hand to pay a little extra money up front to get a discount point. And what that means is that you'll pay less in interest over the life of the loan. So while it may cost you a little more up front, in the long run, it might save you a lot of money. Another thing that you'll want to do a little research into and check out as you get everything in order to purchase a home are first-time homebuyer programs. Many cities and states offer assistance to first-time homebuyers to help you get into homes. And those can come in the form of low-interest mortgages, closing cost assistance, down payment assistance, and sometimes even tax credits for first-time homebuyers. Not everyone qualifies, and there's sometimes income restrictions or sales price restrictions, but it's definitely worth looking into. It's basically grant money as long as you stay in the home for the specified amount of time. It's basically free money, so you may as well take advantage. Along the same lines of figuring out how much home you can afford, you're going to want to think about what type of housing and what location you're going to be in. Condominiums and townhomes may have a more affordable price point than a single family home, but they also will have homeowners association fees, just like a gated community would, and they can range from very low and negligible amount, but they could be in the hundreds of dollars, and that will significantly add to your mortgage payment. Something to keep in mind. Are you okay with doing renovations or getting a house that's a little bit of a fixer-upper? If so, you might be able to afford a house in a better location or get some more square footage if you're okay with the fact that down the line, once you've saved up a little more money, you might have a few projects to do. Thank you for joining me today as I discussed some of my tips for first-time homebuyers getting ready to enter the market. I hope it was helpful. I hope it makes you feel better about the process. And when you decide that you're ready, please don't hesitate to reach out to myself or one of my teammates at thethomasgrouplv.com. We're here to help, and we offer free consultations. Until next time, I'll see you in the next video.